Imagine waking up tomorrow and discovering the safest asset on Earth is no longer safe. Not risky, not volatile, just not trusted. No explosion, no sirens, just a quiet shift in belief. That's the nightmare scenario economists whisper about, but rarely say out loud, because the modern financial world is built on a single assumption so basic we almost forget it exists, that the US government will always pay its debts, on time, in full. And today, for the first time in decades, people are seriously asking, what happens if the world stops believing that? This matters right now because US Treasury bonds are not just another investment. They are the foundation. They sit underneath pensions, banks, insurance companies, foreign reserves, money market funds, and entire national budgets. They're treated like gravity, invisible, constant, reliable. So when cracks start to form, the consequences don't stay in Washington. They travel fast. To understand why this is dangerous, we need to rewind. When the US government needs money, it doesn't print it first. It borrows. It issues treasury bonds, basically IOUs. You lend the government money, they promise to pay you back later with interest. Simple deal. Historically boring, almost insultingly safe. That safety is why treasuries became the world's favorite place to park money. China buys them, Japan buys them, oil exporters buy them, pension funds buy them. Banks treat them like cash with a better yield. For decades, if you asked, what's the safest thing I can own? The answer was never debated. US Treasuries. And that trust created something powerful. Because everyone believed treasuries were safe, the US could borrow enormous amounts at low interest rates, which meant cheap mortgages, cheap business loans, a strong dollar, and the ability to run deficits without immediate pain. It felt like a financial superpower. But here's the uncomfortable part. That system only works as long as belief holds. Treasury bonds are not backed by gold. They're not backed by oil. They're backed by future taxpayers and credibility. And credibility is fragile. The math starts to get awkward when you look at the scale. US debt is now over $34 trillion. Interest alone is approaching, and in some years exceeding, military spending. Every time interest rates rise, the government doesn't just pay more on new debt, it eventually pays more on old debt that gets rolled over. And rollover is key. The US doesn't pay off most debt, it refinances it. Old bonds mature, new bonds replace them. That works beautifully when demand is strong. But what if demand weakens? What if buyers start asking uncomfortable questions? What if they demand higher yields to compensate for political dysfunction, inflation, or debt levels that no longer feel theoretical? That's when the feedback loop begins. Higher yields mean higher interest costs. Higher costs mean larger deficits. Larger deficits mean more borrowing, which requires even higher yields. At some point, trust stops being abstract and starts becoming expensive. Now, to be clear, this wouldn't happen overnight. There's no single moment where the world dumps treasuries and moves on. It would be subtle. Foreign buyers slow down. Auctions get weaker. The Federal Reserve quietly steps in more often. You wouldn't hear panic. You'd hear phrases like temporary dislocation and market adjustment. But the effects would be very real. Mortgage rates don't float in a vacuum. They're priced off treasuries. So are corporate loans. So are student loans. So is credit card debt indirectly. If treasury yields rise, borrowing gets more expensive everywhere, for everyone. Governments feel it too. Countries that hold treasuries as reserves see their balance sheets shift. Some start diversifying. A little less dollar here, a little more gold there. Nothing dramatic, until it adds up. And here's the irony. The US dollar is strong because treasuries are trusted, and treasuries are trusted because the dollar is dominant. It's a loop that feeds itself, but loops can unwind. If treasuries stop feeling risk-free, the dollar loses part of its privilege. Trade gets messier. Sanctions lose bite. Import prices rise. Inflation becomes harder to control without crushing growth.
At that point, policymakers face brutal choices: raise rates to defend credibility and risk recession, or keep rates lower and risk inflation and currency weakness. There is no painless option. This is where hype and reality diverge. Some people imagine a dramatic collapse, the end of the dollar, a new global currency overnight. That's fantasy. What's more likely is something quieter and more destabilizing: a slow erosion. Higher borrowing costs baked into daily life, less room for fiscal rescue during crises, more pressure on taxes or spending cuts that nobody wants. The U.S. wouldn't become poor, but it would become constrained, and constraint is unfamiliar. For decades, America's debt problems were tomorrow's issue. Tomorrow just kept moving, but history shows that reserve currencies don't disappear suddenly. They fade. Britain didn't wake up one day and lose the pound's dominance. It lost wars. It accumulated debt. It lost confidence. Then, gradually, the center shifted. No ceremony, no announcement, just less influence each year. The uncomfortable truth is this: Treasury bonds don't need to fail to cause damage. They just need to be doubted. And right now, the doubt isn't about ability to pay. It's about willingness, governance, political theater replacing arithmetic. Markets can tolerate bad news. They struggle with unpredictability. So the real question isn't whether the U.S. will default. It's about whether the world continues to treat its promises as unquestionable. Because once trust becomes conditional, once safety needs justification, once risk-free requires explanation, the system doesn't collapse. It changes. Quietly, relentlessly. And by the time everyone agrees something fundamental has shifted, it already has. So the question isn't what happens if the world stops trusting U.S. Treasury bonds. The question is simpler. How would you even know when it starts?